Hello and welcome to the ACT Middle East Treasury Summit 2021 and this session on access to liquidity. My name is Chris van Dijl and I will be your host and moderator for this session. Now, access to liquidity has been very challenging at times with increased prices, lack of availability, sometimes dollar liquidity as well. And this is not just due to creditworthiness, but very often due to limited competition. In this very exciting session that we have for you ahead, we will be looking at how you can improve your liquidity solutions by considering examples from two leading corporates in the region. Now, before we head off, a little bit of housekeeping. This session will be recorded and will be available for 14 days after the end of the conference, so you can rewatch it at your leisure if you wish to do so. This is a live session, so we are very much looking forward to participation and interaction from the audience. So please, if you have a question, please submit it. There should be a ask a question button on the right side of your screen. And without that, let me go ahead and introduce our guest speakers for today. We have Nader Ragheb, who is Vice President and Group Treasurer at Orascom Construction, and Staney Pullolickel, who's the Regional Treasurer Commercial, MENAT, SSA, and Asia at General Electric. Gentlemen, it's a pleasure having you here. Let's start off with Nader. Once again, very much thank you for being a part of this session. Could you please start with give a little bit of introduction about yourself, about Orascom Construction and the liquidity management at Orascom?
Sure. Thank you, Chris, and appreciate the opportunity. And I'm very excited to join ACT this year. I've been serving as the group treasurer for the past couple of years at Orascom Construction. So just in time for the pandemic, I took on the job for becoming the group treasurer. The group itself is a leading global engineering and construction contractor. Our footprint is spreading across the Middle East, Africa, and the US. In terms of the size of the group, we have an annual turnover of around $3.5 billion and a backlog of around $5 billion US. So you can imagine, I mean, a group of that size with that footprint, liquidity is definitely a key concern day in and day out.
Fantastic. Staney, very good to have you again on an ACT session. Many people know you already, but please introduce yourself. GE, for those who don't know, should be a few, and how liquidity management is handled at GE.
Chris, thank you so much. It's always a pleasure to be associated with the ACT conference, and especially on this specific topic, which is very close to heart. From a GE standpoint, the company is a large industrial company. We operate in 4 different segments: healthcare, aviation, power, and renewable energy. All these 4 segments, at a global level, are mirrored into the region as well. So we are pretty active in each of these segments here in the region. I represent the commercial treasury function, which is in essence a function enabling our commercial teams with treasury solutions to really win more out in the market. From a pure liquidity standpoint, we manage this both regionally and globally, and I'm sure we'll get into more details as the conversation progresses. But happy to be here.
Thank you, Staney. Nader, let's go back to you. With regards to liquidity management at Orascom, I believe you have been looking outside your traditional liquidity partners, the banks, and took a little bit of an outside of the box approach. Could you expand a little bit on that?
Absolutely, happy to do. First of all, I mean, just to give a bit of background to the policy that we apply at Orascom, liquidity management is a centralized function, and therefore we manage liquidity across the group, across the region, to the extent that is possible in a centralized way, where we try to work as an in-house bank for the entire group, meeting ends with the surplus of funds and deficit of funds. With that being said, I mean, this has been the policy for the past decade for the company and for the group. With that being said, when COVID started to become a key concern for everyone, and was during Q1 of last year, we have put several options on the table. At times of pandemic, cash is king, and everyone goes back to the basics. Being well capitalized, being rich on cash, and with accessibility to that cash to serve any part of the group that is operating in the Middle East, North Africa, or the US that may have a future need was a very critical and a very important decision to make. With a variety of options on the table, we as Orascom have elected to apply for a small working capital facility from one of the DFIs, which is European Bank of Reconstruction and Development. It goes by the acronym of EBRD. We've had a few options in that solution between EBRD, IFC, which is the International Finance Corporation, which is a member of the World Group. There were several deciding factors to opting for one over the other. But the general idea here was to actually tap the DFIs. The normal commercial banks, especially in Egypt, they were tight on liquidity. And therefore, we've decided to approach the DFIs on that, and therefore it has served us very well and is become a very important partner for us at times of pandemics and times of needs. Hopefully we don't have to go back again. Hopefully we can have the pandemic over and resume our lives normally. I think this morning everyone got the news that oil is back up at $80 per barrel. It's on the back of some supply shortages, but at least we're hoping that one, the economies are restored, liquidity is restored. And again, when a time comes for asking or looking for liquidity, sometimes going a little bit outside the conventional methods is becoming very useful and very helpful. Happy to take questions at the end, of course.
And coming back a little bit to your process with the EBRD, how smooth was that whole process, and how long took it to really finalize that whole process? Because it's of course completely different. They need to know your company, you need to know them. I'm sure documentation-wise it was pretty intense. How long did that take, and how was that process?
The program that was launched by EBRD was under the umbrella of a COVID support umbrella. We have never had a corporate loan directly from EBRD, and therefore we, as you rightly pointed out, we had to build the case from scratch. We had to go through the documentation, negotiations and everything. And I think door to door, from signing a mandate and a term sheet to actually disbursing the funds, it was in a matter of 4 to 5 months, which is a little bit unusual for DFIs. DFIs have the reputation of being notoriously slow. The EBRD have actually become very reasonable and very supportive. Eventually, on one hand, the notion is that this is a COVID relief or a COVID support package, and it shouldn't take 1 or 2 years to negotiate and to close. Otherwise,
correct.
The purpose is not served.
Correct, and that's quite impressive to get something in place within 3 to 4 months. Yeah, end to end. That's really impressive.
Absolutely, and I think we were very pleased with the outcome. And since we have closed, we have been maintaining the facility and operating it very smoothly. And I think it's become a very useful tool for others. And I also want to point out that both EBRD and IFC, just as an example, they serve large corporates like Orascom. They also serve SMEs. They serve a lot of the sizes of the different private sector corporates. So I think it's a good solution for everyone to consider.
Fantastic. That's a very good point for all the treasurers and cash management out there. Staney, let's move over to GE. I believe GE has also been looking at optimizing liquidity, but not really accessing or contacting your normal liquidity banks.
No, absolutely, Chris. In fact, just to take off from where Nader left off, as GE, we also manage our debt at a global level. So we go to market to borrow at the top of the house in the US. That's said and done at a regional level. The access to cash is rather through that funnel, and also through intercompany mechanisms, where cash is fungible across the group. We've got great banking partners which have helped us set up liquidity solutions and cash pools across our group. So cash hence is managed very well internally. So the way I look at this whole problem statement at this point of time is internally and externally, right? So first is, if you look at it internally, we embarked on a journey of cash transformation and liquidity, focus on liquidity much before pandemic, actually, late 2017, 2018, where we tried to check, are we doing all what we need to do to manage what we have well? I think that was the key question. Are we billing our clients in time? Are we carrying too much inventory on our books? Are we looking at the quality of billing? Are we collecting cash only at the end of the quarter, or are we looking at collecting cash throughout the quarter? So the need to make sure that we've got the right processes and systems in place without inventing a financial solution. Very easily we could go out to market and get an inventory solution in place, or look at factoring solutions. But that's not what we wanted to do. We wanted to clean up our house internally, and that transformation journey, as I said, began some time before. So by doing that, we were very well poised during the pandemic. Aviation as a sector, clearly did not generate as much as cash in the last, during the whole pandemic season. However, we were not troubled as much because internally the ship was running well. So that's one bit. However, we couldn't be oblivious to the fact that there is tightening of liquidity in the market, and that was really affecting our customers. Now that, and hence, the role I play and my team, gets in, is we try to support our customers with financing solutions using our banking relationships, where we would introduce them to new parties, bring in ECA-driven buyer's credit solutions into deals, which eventually enable our sales. So even if, for example, if I'm getting a bank to the table to finance a particular customer, it would be specifically because GE is on the other side of the table. The bank understands that when there's a project involved where GE is, putting its muscle in terms of equipment, they get much more comfortable, and hence that marriage of making sure that our customers have the cash to pay GE in time was something which worked very well, rather than just going out and saying that, look, you don't have cash, we'll give you 2 years deferred payment periods. That's an easy solution, but the more difficult solution was probably the best for us as a company.
Correct. So we have really two very good examples on how to improve liquidity, either by accessing liquidity from a new party, as Orascom has done, and Staney really looked internal with GE, how they could improve processes, really look at your cash conversion cycle and see how can we improve DPO, DSO, and DIO, as we say, days payable outstanding, days sales outstanding, and so forth. So there's two different ways that you can really optimize liquidity, and that's great to hear. We have actually some questions from the audience. First of all, how do you measure liquidity risk within your organization? Nader, you have an answer on that?
Absolutely. We pay attention very closely to our working capital components. As a contractor, being so liquid and being cash rich at all times is extremely important for a contractor to be able to complete its job. So we on a monthly basis, we monitor the working capital components in terms of our overbillings, underbillings, advances, receivables, etc. And on a daily basis, we monitor our cash and debt balances. We have our own internal targets and thresholds for tolerance. We have our red flags, etc. And therefore, it's an immediate monitoring of cash and debt and a monthly monitoring of working capital components of our balance sheet.
Okay. Staney, any viewpoints from your side?
Yeah, I think this is a fantastic question. The management of risk starts from understanding where you are at a given point of time. So I think the first step is, as a company, we've always tried to see whether we've got the right systems in place and the right tools in place from a treasury perspective to be able to assess where we are. Because many a times when I've spoken to colleagues across the treasury vertical, many colleagues mentioned that when they start collating information on where we are, by the time you end up collating the information, your information is already 30 days old. That doesn't work. So information on a real-time basis to understand where you are is critical. Understanding where you're going wrong and constantly working on it to get better on a day-to-day basis is critical. And one of the key challenges which we as a company were facing is forecasting, because we have multiple businesses which are also in long cycle sort of a mode, and to be able to accurately forecast when you will work on a particular machinery, when will you bill for it, when will you receive it, was challenging because of the number of ERPs, etc. we have within the company. However, that's something which helped us getting a rigor around forecasting, getting the discipline across forecasting, not being just a finance function, but a culture of forecasting, a culture of focus on cash throughout the organization is absolutely critical to manage that level of risk.
Fantastic, and I'm very happy you mentioned forecasting, which is always very critical as well. May I point out to the audience, there's a great recorded session as well on cash forecasting in times of stress, which I would advise you to check out as well. Following question from the audience, over the last 18 months during the corona crisis, have your interaction with your banking partners changed, and how has this affected your relationship with your banks? Nader, let's go back to you.
Look, I think this is very industry specific. If you look at aviation, tourism, etc., I guess the answer would be yes. If you look at pharmaceuticals and technology, the answer would probably be it has changed, but in a much improved manner. For us at Orascom, I mean, contracting, it's a tough job, but it's there at good times. People are spending, capex programs are being rolled out, and at bad times, the governments are pushing stimulus packages and infrastructure projects. So for Orascom, we've been lucky, call it that way, that we are in the right industry. Our relationship with banks, with ECAs, has actually improved throughout the pandemic. That's
so you have become closer even to your banking partners because of this. Yeah.
Absolutely, and I think it's very industry specific how the pandemic has hit different parts of the economy.
Good. Staney, GE is, I believe, a very cash-rich company. So has there been any change in your banking relationships, or at least the management and how you view them and interact with them? So
just a correction there. We have sufficient cash, but we do manage a debt book as well. Okay. So that's said and done. The regional shocks in the region, with regard to a few names which happened just prior to the pandemic, did not help the situation from a local bank standpoint. one of the key things, of one of the differences which we've seen in currently is banks need a lot more information compared to what they would require in the past. If you're working on a particular project where you want them to step in from a financing standpoint, even to the customer, the risk insight or the risk oversight to any decision the bank is making is significant and is visible. That said and done, as treasurers, the need for us to be much more patient and act more as partners with these banks in these times is absolutely critical. I don't see as GE liquidity really drying up here in the last few 18 months. But what I've seen banks do is have a greater amount of focus on the quality of where they would want to spend that liquidity available, which they have. That's the one part of it. And the second part of it really is, I see the regional banks playing a larger role in the last 18 months. I have seen them being extremely selective on local corporates or small local corporates, and they seem to want to work more with the likes of GE and the projects we are supporting. So I see that as a emerging trend and a great trend to take forward.
Fantastic. But of course, GE is a very large organization and you cover quite a few regions and countries as well. Some of them are extremely challenging given the extremely high inflation they currently have, particularly focusing on Lebanon at the moment, of course. How have you handled your liquidity situation in Lebanon as an example?
It's a fantastic point here, Chris. Look, Lebanon is a fantastic location in terms of doing business and a fantastic location from a talent standpoint. A lot of our leadership, a lot of our extremely talented resources, within the company come from that country. That said and done, the country is going through tough times. We realize that. So we've got to manage the whole liquidity situation in two different buckets. One is to support our employees who are on the ground purely from a talent retention perspective in these tough times. We are doing all we can as a company, even including banking solutions, to manage that side of it. Now, from a business perspective, we're candidly not seeing political leadership in the region, in the country, to make key decisions on further investment and so on. That said and done, on the healthcare space specifically, we're still seeing demand. We have this line of business is not just for the sake of revenues and and so on, but it also has a human side of it. So we are not stepping away. We are supporting our customers in Lebanon as and when there is a critical product required. And we see the central bank also prioritizing making payments towards certain priority sectors. We see that happening. I hope we see the political scenario dwell down or become much more stable to see increased business. But we are watching this market on extremely closely, and we are still open to doing business in the country.
Excellent. Thank you very much for those insights. I think they will. There's a lot of organizations with exposure to high inflation countries like Lebanon, of course, in the audience as well. I'm sure they really were happy with your thoughts there. Now, there is a question from the audience, which actually leads to a question I had as well. For those corporates that are on the line, and some of them might not be as global, multinational, and the size of GE and Orascom, what tips and tricks and best practices would you have to actually improve liquidity? Some really tangible, quick wins that you can have. Nader, any thoughts from you?
I guess the spectrum is wide. It fits. There are many options that can fit different kinds of companies.
Mm-hmm.
Maybe first you would start organically, cut down the unnecessary fat in terms of G&A spending, your cost base, trying to improve your profitability. Maybe renegotiate terms with your suppliers, renegotiate terms with your buyers. Maybe the starting point would be to start really from within, start to branch out a little bit to the stakeholders around you, and then you could consider different kinds of options for factoring, for discounting your receivables. I mean, it's very industry specific. And I think specifically at times of pandemics, etc., what we have witnessed is that the product offerings have actually increased in number and in nature. And I think a lot of the banks have been mandated to support the corporates, different sizes and different composition of the corporates. And I guess if your organization has an asset that is sitting there on the balance sheet, maybe you would want to consider moving it from becoming a long-term asset to a current asset, a divestment. I mean, these are just the initial thoughts that we have when I spoke earlier about the different options that we had at Orascom. This was more about the menu that we were looking at.
Mm-hmm. So you were really looking at plan B if you could not get additional liquidity, as you did from your foreign direct investment. You really had a plan B ready for next steps.
You try a combination of solutions.
Of course,
the entire answer doesn't come from one single bucket. So yes, it was a plan B if you wish.
Mm-hmm. Staney, any thoughts from you on quick wins, tips and tricks for the treasurers out there?
I think, like I stated earlier, the need to focus inward first, to clean up your house and to build a culture of cash throughout the organization is critical. It shouldn't be a problem for the treasurer or the CFO to solve. It needs to be understood well within the organization. I think that's primary. Then to look externally, like what Nader mentioned, there are solutions today out in the market. The very setup of, say, Etihad Credit Insurance in the UAE, where they are supporting exporters from the UAE, is a fantastic resource to tap in. My question is, how many corporates have done that? ECI has a mandate to support the length and breadth of corporates in the UAE. Similar ECAs, local regional ECAs are coming up in other jurisdictions as well. Saudi being one of them. The need to look beyond your conventional means and to look at different product sets is absolutely critical. Partner with the banks, have an open and honest discussion with them, and I'm sure solutions will emerge.
Fantastic. That's. I think we heard some very good examples from two leading corporates here. And if I can summarize this, then of course liquidity can be a struggle for many organizations, especially when we go through times of crisis. And the main easy option would always be to reach out for your bank for a new revolving credit facility, a new loan. But I think what we have heard from Nader and from Staney is that quite clearly there's other options that there are. There's not just the banks are not the only one providing liquidity. And what I take away from this is what Staney said very clearly: look internally. Are there ways inside your organization that you can improve liquidity and really start looking at your cash conversion cycle? Yeah, your days payables outstanding, your days sales outstanding, your inventory, to see if you can reduce your cash conversion cycle so you need less liquidity in the organization. That's probably the most important, because that's completely under your control within your organization. And then you can do what Nader at Orascom did. You can then reach out to ECA, export credit agencies, to direct investment, and some of the development banks that Staney and Nader mentioned as well, to improve the liquidity within your organization. I think we had a very great session, gentlemen. I would like to thank you very much for your participation. There were some real clear, tangible tips that you were given. So that's all, and wrapping up this session. Please do stay connected with the ACT at #ACT Middle East. Also check out the virtual exhibition in the conference. There's a lot of service providers that provide a lot of free additional content for you to check out. Also, we have actually a speaker survey, which you should find in the survey tab on the right-hand side of your screen. Please fill it out, provide us with a valuable feedback. Of course, stay connected. Keep talking to us. Staney and Nader will be around today and tomorrow. So if you have any questions and you were not able to post it during this live session, please reach out to them directly. I'm sure they would be very happy to have a chat with you and go into more details of some of the things that they have mentioned. But that's it from us. Enjoy the rest of your time at the conference. And I'm looking forward to speaking to you again very soon again. And once again, thanks to Nader and Staney for their fantastic support and comments and feedback. Thank you and goodbye.
Thank you.